Hello guys. So this is the first time here on Twitch, and it's a pleasure to meet you here. So right now I'm trying just to begin. So as I can see now, there is no one who is watching. So we begin just in general, and because of these days we have what we call the earning dates. So we try to begin with those, and then the other days we can speak about in general about day trading, swing trading, position trading, and then investing. And then when we cover all these, and then we begin with the lessons, and we try to go deep and explain more and more. Okay? So so about earning dates. Understand that there is a relation between a company and its stock, but understand that they are different, and there are similarities and there are differences. So a lot of people get these ideas mixed up. So when everybody, most of the people in the stock market, traders, investors, they always mix. Although a company and its stock are totally different things. A company has its own competitors, it has its own sales, CEO, executives, workers, different stores here in USA, which means national or international in other countries, and all these are what we call international. Okay? Now, what about the stock? Why there is a relation between a company and the stock, and why it is different? So I will try to develop this in this time until some people come, and we can if we can try to develop this, and then you can ask questions if you have. Now as I said, I have spoken about the company itself. It has competitors. It has earnings. And in each quarter, it means 3 months, the company announces earnings. Now, earnings, what does it mean? It means they announce what the company has made as profits in the end of this quarter. It means 3 months from this quarter, okay? And what the company did it good or bad, or what's the problems? And the company try to explain either the good things and the bad things, because listen, understand that the company needs its investors. You know, there are in a company, let's say we take Apple. Apple, we have the real owners, the owners, it means the people who made Apple, the first people when it was private, and there are investors, all the people, either mutual funds or single investors, like anyone, like even you are an investor, you buy some shares of Apple, you are an investor. Okay? So all these people, they should know correct information about the company. And the company, either CEO or executive, he should explain what is the situation of the company. Is it doing good or is it doing bad? And especially what we call earning date. Earning date is a specific date that the company gives to announce. So the media, all the investors, traders are looking for this date. And when they begin to listen, they make an opinion. Okay, is it good or is it bad? Okay? So, now we said that a company has a relation to its stock in the stock market. Now, why we have a relation? I will tell you why. A company, before it go public into the stock market, because understand, in every country there are two kinds of companies. There is a company that it is a private. It means private, they don't have to give financials, how much money they make, how much they give to their executives, has the executive have bought shares or they don't buy shares, they sell some of its shares to other people. All this is a private. Okay, it's like something that is private. It means no one has the right to look at the company financials. So this is when you are private. When the company is private, it means not in the stock market. Now, what does it mean also private? Private, it means you can't buy the shares publicly. You don't find shares publicly in order to buy. So the company, it says when you want to buy, it says private. Now you should call them, and if they accept you or they sell shares for you, they will. But if not, most of the time they refuse, and it's very hard to contact the owners and to get an answer from them because they are private. They don't want to sell anything to the public. Okay. Now, as I said that there is a relation. If the company becomes public, now what does it mean, becomes public? It means it becomes what we call an IPO. Okay? An IPO, it means initial public offering. Now what does it mean? It means they offer shares to be sold in the stock market. So when it goes through a lot of IPO procedures with banks, with stock markets, and to get listed into an exchange like New York Exchange or New York Exchange, or like Nasdaq or any other major exchange. So they give this company a symbol. For example, Facebook, it says FB. Now when you go online into your broker, it means where you see your stocks, companies, you put FB, you will see Facebook, and then you know that it is Facebook. So it has a symbol. Okay? Now, this symbol, okay, is what we know in the stock market. So in order to know the company, you put the symbol, and it shows the company and it's a stock. Now, why the company? When we say the company, let's say Facebook and its stock are different, is that the stock market makes the value of the company. If the investors, the traders, and all the people who are in the stock market, if they like a company, they go to its stock and they buy shares. The more they buy, the more the stock price goes up. Okay, and this is what we call a price fluctuations. Okay, now the company has no control over its stock. Okay, it can't make the stock going up and up or going down. Okay, it's not in its control, because if a company has a control on its stock, it can make it so high. Okay, so the company has no control, and this is the thing that most of the people in the stock market, they don't understand. They think because they speak about the company it is good, it means that the stock will go up, and this is the mistake. So you should see the price, see what's going on to the price in order to understand what's going on to the company. Now, why we say sometimes company announcement is very, very important to the people who are in the stock market. Okay, because they formulate or they form an opinion about the growth of the company, and this is what we call the earning date, as I explained just a few minutes ago. And I said that the earning date, it's the company who set this date in order to give information, and that's why when they give information, I and you and the other guys can formulate an opinion, and then some people they trade, some people they have been trading. It's a lot of stuff that goes after it, but it is just, as I told you, it's a news. And understand that the news, when it comes, it happened at that time, and you see the price change very, very high or very, very low. Now, after the news, most of the time, if the company is doing good, you will see that we have a gap up. It means you, in the morning, next morning, you will see that the company change it means the price of the stock changed so high, and this is called a gap up. It means you see a gap between yesterday close and today's open, for example. Or you can see what we call a gap down. A gap down, it means the close of yesterday is higher of the open of today. Today is very, very low. This is a gap down. You see the gap down, and the stock lose a lot of dollars for each share, and you can see that. Excuse me. Now, let's go now to show you some examples of this earning, and all major TVs, websites, exchanges. It will show you as the company has said that we will have the earning date in certain date. Okay? To make sure you have this, so let's go and see this explanation. Okay, so it will take just a little to show. Okay, as you can see here, okay, as you can see, the earning dates. So I choose for this week here, as you can see. Okay, this week. So earnings announcement for Apple. So AAPL. So AAPL, it's Apple Inc. is January 29. So today is 28 January. So that's why I did this thing. January is today. 28 is today, which is a Monday. Tomorrow, Tuesday, is the earnings announcement. It means the company will announce the earning. Is expected to report earnings on the 1st 29, 2019. It means tomorrow. After market close, please pay attention to this words, which is called after market close. Now, after market close, it means after 4 p.m. when the market closes, the company will announce, but they don't say when exactly. At 4:30 or 5 o'clock or 6, they don't say. Now, the report will be for the fiscal quarter ending in December 2018. It means the quarter ending in December. It means December, November, and October. It means 3 months of earnings, and they will announce tomorrow. According to Zacks Investment, research based on 11 analysts, forecasters, the consensus EPS forecast for the quarter is for 4.17. So this information, now when we say Zacks Investment Research, here this information I got it from NASDAQ. Okay, NASDAQ, which is an exchange. I get the information from NASDAQ.com. You can go to it and you will find the same information for any stock that you want. There are other companies that give you the information. So this, I will let it later to explain because it needs more deep information. So I will explain this later. Okay? So let's continue with other companies announcement. Earning announcement for FB, it is Facebook Inc. It will be on the 30th, it means on Wednesday. Is expected to report earnings on the 30th January 2019. After the market close, it means it's the same as Apple. It means when the market close, the company will give the information and then the big deal begin. Now, according to Zacks Investment Research, based on 14 analyst forecasts, the consensus EPS forecast is $2.17. I will explain this later because it needs more explanation before we get to this. Now, let's go to the third company, which is called General Electric. For those guys who don't know this company, maybe you know it, maybe you don't know it. General Electric company was one of the oldest companies in the Dow Jones when we had 30 stocks, 30 biggest companies in USA. But last year, General Electric has been removed because of its performance out of the Dow Jones after 110 years. 110 years it was with Dow Jones, with what we call the Dow. The Dow has 30 biggest companies in America, and they are called blue chips. Those who know, they are very known. The blue chips, it means the biggest companies in USA. So General Electric was one of them. That's why I put them here for you guys, just to report earnings on the 31st January before market open. Understand here that the earnings is before the market open. It means before 9:30 a.m. on 31st. So 31st is, so we have Monday, Tuesday, Wednesday, Thursday. Thursday in the morning, you should look around 7 o'clock or 8 or 8:30 or 9 when the company announced, and you will see that there is a change in the price. And the EPS, it says for the quarter, it is 0.18. Okay? Now, excuse me. This is for this week, but understand that here I just put 3 companies. Okay? But the companies that will have, or for example, the earnings, it could be a lot. You should go to see the calendar. There is a calendar showing you day by day where is the earning announcement for each company. Sometimes one day we find a lot of companies on the same day. Sometimes different, sometimes next week, the other month. Depends on the ending of the quarter. Okay? And depending when the company is going to be announcing this. Okay? Now, let's go now to the second week. It means next week. I choose only 2. I can choose more, but all the stocks I show here, they are very, very known, and almost all the people know them. That's why I want to make sure they are known. At least you will not get to search for companies that are not known. Now, Snapchat, which is called Snapchat, is expected to report on the 5th of February. It means next week. After market close, it means when the market is closing. After that, a few minutes or half an hour, 1 hour, the company will announce, and the EPS is minus 0.19. It means that the company is losing 19 cents per share. I will explain this later. Now, another company is Twitter. Twitter is very known, and in my YouTube channel I have talked a lot about all these companies. The announcement will be in February 7th before market open, as you can see. Okay? And it means before 9:30 on the 7th of February. The report will be for the fiscal year ending. Here they don't give any forecast about how much. You can find it in some other websites. Sometimes some other websites they don't see, or they don't have a forecast for the EPS. Okay, so this is in general the earning dates for this week and for next week. So let's go and continue our explanation. And our explanation about the earnings. Okay, So we have seen the day. We have seen the day. Hi, Paul Mac. I see you that you are offline here, but you are here. Thank you very much for coming, and thank you very much for following me. Understand, you can. I don't see your. I don't see. Okay, so I don't see you in the chat because, you know, I am just new. I put a hi to everybody, but no one is there. Okay, so let's see here. I might do something wrong. I don't know. As I told you, okay, I come back. So let me see. Let's do this. Okay. So thank you very much, SV Cram 1, and he says, based on earning, should we enter in a trade in a pre-market period? Listen, SVI Cram 1. No, here I'm not speaking about trading. We will deal with this later. Okay, so you can just you can enter, yes. Okay, and you should if you want to trade it like a day trader, because here I'm exposing many things. I'm exposing if you are swing trader, it means you have bought a stock before and you continue following the trend, which is called a short-term trade or swing trading. But what you ask now is a day trade, okay? And you say, should we enter into a trade in a pre-market period? So understand that this thing, when it comes, it means in the price, it doesn't take seconds. So I will explain right now the procedure, how it works, and then I can answer you with details, because your question is ask us for details on how to enter and how to see the thing. Okay, so just give me some time. I will try right now to explain for swing traders. It means if you have a short-term trade, let's say you bought Facebook or Twitter or Apple many days ago and you are following the trend, and this is what I do in general. I'm a swing trader. Now, what you should do in order to for this earning, because earning is a very, very important news. The stock can jump up, it can jump down. Okay? But you, as a day trader, I will try just to show you right now these things, how it happened. Sometimes the stock goes up for many hours, sometimes it goes many hours down, and sometimes it is not. I will show you the most common scenario that we see always. Okay, so let's go to the explanation again. Okay, let's go to the explanation again, and I will explain to you this thing. Okay, now, so let's say we take Facebook as an example. Let's say at 4 p.m. this is where the market closed, and then we have here, let's say at 5 o'clock, the company gives the earnings. So this is just a common scenario, earning news. Now the price was, let's say, $145. Just an example, okay? I'm not going to give you the exact thing because we don't know until 2 days where Facebook will be. Let's say $145. This is the close. The close of... Now, the company, for you, for example, in order to see the price, you should keep an eye on the price here. Keep an eye. You open like this. And you should first see the earning news when. Is it 5 or 4:30? If it is not, you should have either your broker who gives you the exact time if he knows, or you should follow big TVs, and it will show the announcement, because there is announcement. Sometimes it is done by voice. It means the CEO of the company or executive, he will announce this announcement. It could take 5 minutes or 8 minutes or 10 or 15 or okay. Now, when the guy begins to say, there are millions of people who are watching. So if people think that the company has made good earnings, you see the price going so fast with volume. The volume will change so high, it begins to grow up because the people begin to buy according to what they understand. Some people think it's going down and they begin to short. This is in general. They begin to short, and other people begin to buy long. But you tell me, for example, why some people buy and why some people short. This is just the opinion of the trader. It's you who will make a decision. Do you think it's going up or down? But most of the time, in 1 second or two, if there is a gap up, you will see that the stock is going to 155, for example. $10 has already been made just in 1 second or two. So you should be, it's very hard to get to do this, to follow in 1 second or two, and you will be with the winners. Sometimes you buy long and you find that the stock is going down, let's say to 135, down, because the majority wins. It's like a democracy. Okay? -10. And the thing that you should focus on when you are at that time watching is focus on the thing that I want to explain. I will explain it just right now, which is the analyst forecast. analysts forecast. This what you should pay attention to it, because this what makes the stock goes up or goes down in few seconds. Now, sometimes the stock continues to go up little by little by little at the end until 8 p.m. Or it can continue to go down, to go down, to go down 8 p.m. when it's going down. Now here where you should go and make your trade, because from here for here is very hard to get it. It's very hard. Maybe you short and the other guys are buying. It's just a balance between buyers and sellers. Sometimes understand that this is not a rocket science. It is not a science. Sometimes the company said good news, but you see that the stock is going down. And you ask yourself why? Because this is not science. It is just people. People who are buying and selling. Okay? So for you, if you want to enter, it should be after the seconds, because you are not there, you can't make it. And you can just do what we call blindly buy before. At 4 o'clock you buy and you wait. You can do that. But here, either you see going up or going down. So it depends on what you put. Now, this thing that I'm explaining here, it doesn't mean that that it will happen like this. Okay? But in general, it happened like this, and the gap up or gap down, it will show in 1 second or 2 or 3. And then from there to the end of the night, if there is something going on, it means that these people coming after, because they can't be with the first guys. Okay? Now, before we continue this, I will just give you an idea about what we call the analyst forecast. Okay, so let's go. Okay, let's see your question before I continue. Will stop loss help if market goes opposite of trade? Listen, here is the deal. You ask a very, very important question, and this question will explain to you the thing. Stop loss after the market hours or before the market hours works with the limit order. Limit order, it is not a market order. Okay? So, most of the time, if you put it means you put 2 orders. You buy at this price, you sell at this price. It means you execute 2 orders, one after the other. But in this case, it is very hard because your limit order, it can't be executed or filled. Why? If the price has already gone before or above or after your thing, after your it jump. I will explain this because see Svikram 1, this thing is very, very delicate. It means you are asking about something that it is so deep in training. Okay, So I'm trying just to answer you in general, because here in this presentation, I'm not going to go into my training, because I teach all this stuff. Okay, so I'm not going to go into details into this stuff, because it is training. Okay, it's not a general presentation. Okay, so let's before we go and answer these questions, let's go and give you I will give you, for example, an explanation about earnings. Okay, so let's go and check. So let's go little time, and then we can see the explanation. Okay, as you can see here, if you have been watching from the beginning, I showed the earnings for many companies. Now let's take this example, and I will show you just an example of this. Now here it says this is for Apple, and it is January 29. It means tomorrow, Tuesday, after the market close at 4 o'clock, they will announce. Now, according to Zacks investment research, based on 11 analysts' forecasts, the consensus EPS forecast for the quarter is $4.17. So what does it mean for you? You should understand this. If you are going to follow the earning dates, you should understand what this means to get an idea. If you know, I will just try to explain for others who don't know, okay? So, you should put these two things here. Now, here we have what we call the analysts. Analysts are guys who are paid by brokers and by institutions to analyze companies and to give information. Now, what they say, these analysts, they say earning per share. So EPS, it is abbreviation for earning per share. What does it mean? It means all the shares of the company, or what you call company shares. So they divide by the earnings, and they get, or is the opposite thing. So I'm sorry. The earnings divided by company shares, you will have. So I will just change it. Okay. So the earnings. Sorry for that. So the earnings of the company, which is, it could be billions of dollars, you divide by the company shares, and then you get how much money you earn as a profit for each share. Now this has to do with the company. It's not stock market. Okay? It is not this money that they show you, $4.17. It is just a virtual information for you, but it has nothing to do with stock market. It means if you own Apple, they will not give you $4.17. Okay, so this is just what the company has made. That's why people, they don't understand the difference between the company and stock market. That's why I always explain. And this is not the dividend. Okay, this is not the dividend. The dividend is calculated later. Okay, so let's continue. Now, after 4 p.m. tomorrow, Apple will announce, let's say they say that the earnings is $5 per share. It's not 4.17. They give good result. Now, whenever they say $5, whenever they just say it, you see that the stock from 145, it can go to 155 or to 160 or to 170. Why? Because there are millions of traders. They have money. They are just waiting for the good or bad news. If it is bad news, they sell short. They are ready. And these people, and there are people who have, they could be hedge funds, they have billions of dollars, they could be millionaires, they could be anyone, even you. Even you, even if you want to short, sell one share, you can do it. Okay? So, but understand that if most of the people, they buy heavily, in 1 second or two, the price will jump. So normal people, they can't do like the sophisticated people. They can't. So it's very hard. If you want to try it, try just to try it with one share. For example, just to try to practice with one share. Sell one share short or buy one share and try to see the company, what they say, and be like the others and hit buy at the same time. You hear 5, you hit, maybe you will be with them. So you will never know. And the problem is that when you hit buy or sell short, they give you only the limit order. The limit order, it is hard. Okay? It is hard. It is hard to get it. Because when it is now 145 and you limit order to buy one share. But when you click, let's say the stock is 146, so your limit is not filled. Why? Because the stock has jumped over your price, jumped over. Because they don't accept market order after the market close. So this you should understand from now. But you can do later if the stock, you see it's continuing to go up, you can do that. You can do that later, but not at the beginning. The beginning it is so hard. But if you can do it, try to do it. I don't say you can't, but it is very hard. And understand that the execution, you should have a broker that it has a high execution thing. So normal brokers, it's very hard to get this limit because all the people want to buy like you 145. But 145 doesn't stay 145. After less than a second, it goes to 146, 147, 148, 149. So it goes so quick. But the good thing is, after you see the jump in the price, you can do that. I will just show you just an example. But this you should you should follow it in order to do it. So for example, now it is 5 p.m. The price is 145. Let's say they announce and it's good news. I say good news, it's above what we call the forecast of analysts. Now, you will see that after a few seconds or 1 second or two, it goes, let's say, to 155. So this $10, you don't get it. You don't get nothing. Because it was so quick. let's say it goes slowly like this, up and up and up, let's say to 160, and it stops at 8 p.m. Okay? $160. It stops at 8 p.m. because understand that from 4 o'clock here, 4 p.m., the market closed, and this is called after hours. And try to check if your broker has after hours trading, yes or no, because some brokers, they don't have. Okay, so first you should check your broker. If you want to be a day trader, you should have this 4 p.m. to 8 p.m. and from 4 a.m. to 9:30 a.m., which is the beginning or the open. This is called the open, and this is called the close. So at 4 a.m., you should be able to buy and to sell with a limit order. Now, what is your chance to make money if there is a good news? Is when you see the jump, this is the jump, the price jumps. In 1 second or 2 or 3, it jumps. Your ideal thing is to buy here. But with the limit, you can buy. Because here it goes slowly. It goes slowly, it doesn't go like here. Here it is so fast. And if you want to be a day trader, you need to act quick and to wait for the earnings news and to check the price until the end. From 4 p.m. when the market closes until 8 p.m. It means 4 hours you should be there to do this trade. Okay? And you can do it in the morning, and other techniques we have to do it in the morning. Okay? So these is what we call what we see in order to buy or sell, to sell short or to buy for the stock. Now, understand, I give you something before we go ahead and continue. A lot of people, they don't understand why we have good news. For example, analysts, I just give you an example. Analysts say the EPS is $4.17 for the share. This is what the EPS of the analysts by share, okay? Now the good news, it says $5. It means way better. It means the company has done so good and it has done good news for the company. But sometimes you see the price going down. The price go down. You ask yourself, why is that? Why we have good news and the stock doesn't do good? It goes down or doesn't go up, or why? This is because what moves the stock, it is the people. It is not, yes, it is the news, but it is the people's opinion. It's like a democracy. It's like a democracy. The more we have like a demand on a stock, it must go up because the demand is too high. If the people supply, it means they do selling short, the stock will go down even though the good news. So don't think that you will have what we call a sure thing. This is, I talk about it too much in my channel, YouTube channel, which is a sure thing. People want a sure thing. This will never happen. a sure thing. It means if it is good news, the stock will go up. Yes, in general, but it's not always. Because the people are foolish. People sometimes they see good news, but they sell short because they get another information from another side, or because a mutual a hedge fund wants to sell it short, or whatever. Okay? So this is in general about the earning news. So let's go and see, and hope, as Vikram1, hope you get some information about what I say. So even if you have more questions, you can ask, and even you can send me an email later when I finish, and I will try to be at 10 o'clock for these 4 days, because I'm just a beginner here. I'm just trying to see the guys here. Okay? But if you want to see more videos, not live, you can check my YouTube channel, and you can get more and more. Okay? So let's continue with this thing. Oh, Svikram, thank you very much and welcome. And understand that most of the time I do a live on Friday at 10 o'clock on YouTube. That's why there we have a lot of people and a lot of questions. So I'm trying just to answer as much as I can because of this thing. Okay, thank you very much. And please try to follow me, because I'm trying to build an audience here. I'm just new here. This is my first time. So thank you very much for coming, and thank you very much for being a follower. Now, I will be right now, now we are nearly 1 hour. I'm trying right now to explain more and more about these earnings, and to explain that the company itself and the stock market are two different things. They have a relation, yes. They can influence each other, yes. But stock market, it is the traders, the investors who change the price. It's not the company. The company cannot push its price up. Yes, it can advertise. It can ask people to buy its stock because company is doing well. It can. This is advertisement. But in stock market, it can't push the price by itself. Okay? It's the traders who, their opinion, will make a company great, yes or no. Okay? You can see, for example, Amazon, a lot of people, or Google, a lot of people, they love the company for years. So they invest in it. These are what we call the investors. Investors, it means they like something and they stay with it 10 years, 20 years, 30 years, 40 years. Because each year, each 2 years, 3 years, they see some money coming. That's why they stay. But if the company collapses, like for example, Sears, if you Svikram, if you are into USA market, you can see Sears, for example. You can see JCPenney. They nearly disappear, okay? And they were very great companies, but they collapse. So you see, when the company collapses, investors, they flee. It means they escape this company, they sell, and they try to find another company. Okay, now let's see here. So since we spoke about this, analysis forecast and the company. This is what makes the news. But understand that the news, if it is good, it doesn't mean 100% that that it will be going up, the stock. Sometimes it goes up and will go down afterwards. So understand that this is a matter of trading, and you should be a day trader to do this. Now, we have finished with this day trading. Now, since we have spent 1 hour, we go now to what we call swing trading. And this is what I do. Swing trading is to follow trends. Trends, it means when the stock is showing like a trend and it's going up. Now, let's say you are following a trend, the stock is going up, and today we have an earning news after the market close, like Apple. Now you ask your question, what you should do? Do you hold until you see the news, or do you sell, or what you should do? Okay, this is what I am going to explain right now. And bear with me, because the explanation I'm trying to explain bit by bit for everybody, and then you can take the decision what you should do, because as you are a trader, you should understand that you have a responsibility to choose. Now, you have to learn strategies and techniques in order to trade, but sometimes your choice, if you find 2 stocks, you buy one and you leave one. So it is your choice. So no one will ask you to buy this or to leave this. Okay? Now, let's go to the explanation, and I will try to explain. Okay? We try to explain what's this short-term trading and what you can do. So bear with me, guys. I will try always to explain. And sorry that I'm coughing a lot. Okay. So let's take an example. See here. Let's say this is Apple. It's going down a long time. I think it was Apple was around 233. I will check the chart, and it stops going down, and now it's going up, and today here, let's say today, all this I will show you by the day. This is the day. Okay, now this is the day here. Let's say this is Tuesday. Since now it's 11 o'clock, it's 11:04. 11:04 this p.m. Eastern time now. Eastern time, this is where we are now. We are here. Tomorrow, here is, let's say, this is the open. This is the close. And the news should be here after the close. The news, the earning news. Okay? So, let's say you own Apple. Okay, let's I will give you right now 156.30. It's 156.30 cents. Okay, 156.30 cents is the close of Monday. Let's say, just an example, okay? let's say tomorrow at the close it is 157. Just an example, okay? $157 is the close of tomorrow if God wills. Tuesday. Now, if you own, you are a swing trader. Now, what does it mean, a swing trader? Before we go ahead, we should explain what is a swing trader. Most of you guys know what is it, but I will explain more and more. A swing trader is a trader who follow the trend. The trend is when the stock is going up or down for many days or weeks or months. It could be 6 months, 7 months, 8 months. Okay, so this is what we call swing trader. You should hold for the night. This is the difference between day trader and swing trader. If you are a day trader, you want, for example, to trade the news at let's say at 5 p.m. You trade the news. This, okay, this you can do it as a day trader. It means you let's say you buy at 5, it's going up, for example, and at before 8 p.m. you close. It means you sell your shares and you do a day trade. This is a day trade. But if you are going to buy and to hold for the next day, this is called swing trading. And these are two different styles of trading, and you should not combine them. In general, you should never combine them. Because why you shouldn't combine them, I will explain it just in a few minutes. So let's finish my idea here before before we go ahead. Now, let's say you buy at $156.30 today, which is Monday. You bought it, or you bought it earlier, like many days or many weeks. It doesn't matter. It doesn't matter when you bought. What it matters is tomorrow, is Tuesday. What are your choices? Okay, what are your choices? Now, for you, okay, you have before the close of tomorrow, okay, you have, just to make sure you understand, you have in general, you can wait until tomorrow, the close. Now, you have some choices to do. Now, let's say choice number 1. Let's say you are scared. You say to yourself, what if there is a gap down and I lose a lot of money from this stock? Like it did happen with Facebook and Twitter before. They lost a lot. So you ask yourself, what should I do? Now, if you are scared, you can sell all your shares. Sell all shares. Now, when you sell all your shares, it doesn't matter if the stock has gap up or gap down. You don't care because you are out of the trade. This is number 1. Number 2, you can hold. You are not scared and you have a big risk to stay, and you stay. The big risk and the big reward, because you can the stock can jump and you can make a lot of money, or the stock can go down and you have a big loss. But this is part of the game. Either you hold or you sell. Now you can do something in between. You can sell half. Okay? You can sell half. okay, half of your shares in order to reduce risk. So there is no other smart way to play with this, because you should either risk or don't risk, and this is trading. There is nothing which is a sure thing. You just buy because you know there is a gap up, or you sell short because there is a gap down. So it doesn't exist, this thing. So that's why I told you, and you should be careful, that in the stock market there is no a sure thing. A sure thing, you find it outside the stock market, in businesses. Okay? I will give you an example later about a sure thing, but not in the stock market. Okay? It's not in the stock market you find sure thing. This is a business where always there is a risk. There is no a sure thing like other businesses. Because other businesses, there is a sure thing, and I can give you an example to understand this. Okay? Now, if you are a swing trader, you have these three options. Scared, you sell all shares, or that you hold when we have big risk and reward. You can make a lot of money when there is a gap up, or you lose a lot of money. Or you can sell half. It means you just reduce. You can make some money, which is very good, and you can lose some money, and you make some money because maybe you have been trading this stock for 2 weeks or 3 weeks, and maybe you have made some money. Excuse me. So this is about swing trading. Swing trading, you should take choices and understand that swing traders, we are looking for trends. It means the long trend. It means where the stock into a movement of a trend. This is a downtrend. When it's going down, a downtrend. When it's going up, is an uptrend. So either it's up or it is down. And we follow the trends. Now, let's say you are an investor. What will happen if you invest for Apple for many years? So when you are what you call an investor, you don't care about daily fluctuations. What you care about is year by year. Year by year, okay? Year here, year here, year here, year here. So sometimes this year, let's say in a stock, you make 25%. Next year, let's say you lose 5%. The other year, you lose 2%. You make 2%. You make here 50% in a good year, for example. Now, if you are an investor, you are looking for the long trend, long investment. And Warren Buffett said it should be like 20 years. It means in order to know if a company is good, you should need to wait. It's not you buy it today and because tomorrow it goes down, you sell it. This is not investing. So an investor looks for the company, not for the stock. You should look for the company potential first before looking for the price. So if you are an investor, don't worry a lot, except you worry when the company is not doing good as the other companies in the same industry. I will give you an example. To understand this. Now, the Dow Jones, and most of the people know the Dow Jones Industrial Average. It has 30 blue chip companies, which is 30 biggest companies in USA. In 2016, 2017, the stock market was so good. And then It stops in the 26th of January 2018. This is the highest. No, excuse me, 2017. And then beginning of here of 2018, the stock market collapsed into what we call a correction. This is called the correction. For you who are not following me on YouTube, you can check this from 27 January. I follow the market always. So when it goes down, it's in February 9, 2018. This is the low of the correction. Okay? And then the stock market was going like this, and then it go down before the end of, and now we are 2019. Okay? And now it's going up a little bit. And we are still in the correction era. This is how is the stock market from 2016, 17, 18, and 19. Okay? Now, if your company, let's say I give you a company that it is called GE, which is General Electric. It was with the Dow Jones. But last year, it happened something bad to the company that instead of doing the same, here, after the 9th February, this company is going down like this. Although the other companies, they didn't go down the same as GE. GE before, I think before here, it was 32. Now I think it's 14, or I will check right now the price. So if you are an investor, you should look where the company is with the industry or with the index and see if it is doing the same or above or below. This General Electric was doing below, okay, was doing below, and what's the problem? This company has a problem. So you should not stay with the company in general. Here I'm speaking about the price, because for me, I am more into price than to fundamentals, because the price shows you the fundamentals in secret. If you see a company is losing a lot of money for 1 year, 2 years, 3 years, and all the other companies, competitors are going up, what does it mean? It means this company is losing money. Although I have never seen the problems of this GE. I have never seen. I have never gone to its fundamentals like balance sheet, earnings, and the other. But I know that there is a problem of earning for this company. This is why I don't need fundamentals. A lot of people, if you are an investor, you need fundamentals to choose and to follow the company. But if you are a swing trader, what do you need? The most important thing you need is price. Price doesn't lie. And this, if you can take it from me, this is the best thing you can take from me is this. So price never lies. Okay? But people do. People do, okay? Price never lies, but people do. Now, why is that? An executive of a company or CEO, he will tell you that the company is doing good. There is no worry. And after 1 month or two, they do bankruptcy. It means you lose all your money. You lose all your money because these people lie. And they can't tell you the truth, because if they tell you the truth, everybody will sell and it will be a collapse for the company. So they will never tell this information until they are out of the stock market. And you lose all your money. And this happened each year for companies or for investors. So if you are an investor, in the future I will give you more information about how I see investing, because I have my ways to see investing that are different from other people. Okay, so let's go back. So guys who are watching right now, okay, so if you have questions right now about earnings, you should ask me right now, because we have time. It's 11:21. We still have time, but I'm still having to tell you other things. So please, while I am explaining, if you have a question, please ask it right now for what we call the earnings. Now tomorrow will be Apple earning after the market. I will tell you right now what you should do. At least you have an idea. So I have just explained, but at least I have an idea. You have an idea what to do if you are a day trader and if you want to day trade. Okay, so let's go and check. So let's go again. Let's go to the chart. Okay, so bear with me. I will show you the chart. Now this is Apple, as you can see. Okay, now this is what I tell you. Apple was in a downtrend. You see that? Apple has a high of 233.47 in the 3rd of October 2018. But it was in a downtrend until we have a gap down here. And then it stops here at 142. From 142, it goes to 156. It's $14 from now. Now, look at the chart. What do you think? Do you think Apple will go up in like this? Let's say 156. It goes to, let's say, 170, 175, or whatever thing you see. Or Apple will have to go down. Okay? So predicting is not a good tool to make a trade. It's not a good tool, because when you predict, anyone can predict. So tomorrow, if you predict that it is going up, it go down. You predict it's going down, it go up. So this is not a strategy that you should follow in order to make money. Okay? So as I showed you before, this has a relation with risk. It is you, how much risk you want. You want the total risk when you buy all the shares that you want and you hold them for the earnings. This is total risk. Either you make a gap up, you make a lot of money, or you have a gap down and you lose a lot of money. So it depends. So no one knows. Now, as I showed you before, okay, as I showed you before, you should do the same, do this. Let's get to the thing. Yes. Okay. So what you should do in general, tomorrow, because it's after the market close. Now here is the close $156 is the close of tomorrow. So you should see the close. Let's say this is the close of Tuesday of tomorrow. Let's say we take this the same, for example, same close. Now you should, after 4 p.m. first try to see the company if it gives you an exact time. For example, they say at 5 p.m. Some companies, they don't give you the time. So try to see if you find to listen before Yahoo has a service for free where you can listen to the company officials or CEO when he gives the earnings. You have to listen. Try to find or see your broker if you find a way to know when. And what you should do, you follow the price after the close. This is the close. You should follow the price until 8 p.m. It means you stay 4 hours. It doesn't mean you wait for 4 hours, but you try to see the difference between 156. Is it going up or is it going down? Whenever it begins to move, you should either buy long or sell short. But understand that selling short is so dangerous. If the stock is going down for a few minutes and then it goes up and you can't exit, because a limit order is very difficult, to fill, because we are not in the real market. We are in after hours. We are not. You can't use the stop order or market order. You can't. Understand that. This is the major problem, because you know this. Why you ask yourself why there is no market or stop? Because there is no market. So the market makers who are there to facilitate the market, they should protect themselves. They should buy and sell. They buy by the bid and they sell by the ask. So they should protect themselves. That's why you should just put limit order, either to buy or to sell short. For them, they don't care. They don't care to fill all these orders because sometimes they can't. So to protect themselves, your limit order, your limit order, sometimes it is not filled, and most of the time not filled. So you should be careful. If you are an experienced trader and you know how to use limit order, and you have traded before the after hours, so you know what you are doing, this is good for you. But if you are just a beginner, you don't know how to use this limit order, because sometimes it is not filled. You don't ask the broker, oh, I put a limit order to exit, why it is not filled? He will tell you that the price jumped. There is no your price. For example, let's say you bought before the market closed at 4 p.m. 156. You bought before the market closed at 50 minutes before the market closed. You buy 100 shares. Okay? And you put, for example, a stop loss at 153. It means you think you are going to lose $300 in this trade. This is your risk. Stop loss. Stop loss. But when the market, we have bad news, it goes from 156. It goes to 144. Just the price jumped. The price jumped. So your limit is not filled. So you can't ask your broker, oh, why I didn't exit at 153? Because 153 doesn't exist. It goes only like a block, like a move in 1 second. That's why I told you it's so quick. Because millions of people are looking right now like you. And they are very powerful than you. Some people, they have millions shares to buy. And they buy continuously with a robust orders sequence, and this is not available for small traders. Okay, so it needs more sophisticated broker to do all this stuff. You can, if you want to do the same, you can ask your broker how to do more orders. If one is not done, the second one, the third one, ask your broker how to do this. If you get a solution, you can do that. Okay, so this is this is in general. And another thing which is so important, I will show it to you. This a lot of people, they don't understand, but I will try to make sure you understand. Now, if you are doing a day trade, stick to the day trade. It means if you are going to do the day trade of Tuesday, so stick to Tuesday and don't go to Wednesday. Wednesday is another day. So if you hold the stock from Tuesday to Wednesday, here you are doing swing trading. You are not doing day trading. And maybe you ask me the question. You say to me, oh, I am free. I can do whatever I want. Okay, you can do whatever you want, but you break the rules. When you break the rules, the simple rules of trading, and understand that you will have a big problem in the future. Because day trading, it is not the same as swing trading. Swing trading, we are following a trend for many days or many weeks. Day trading, we are following the fluctuations of the day, from 4 a.m. to 8 p.m. All this is the day. And we have the open of the real market, and we have the close of the real market. Here it's 9:30 a.m. and 4 p.m. is the close of the day. This is the trading day where all the people, they come to trade. But you can trade before the open, which is called before the hours, before market hours, or after 4, which is called after the market hours. You can, but you can do only limit order. Limit order. You can do what we call a stop order or market order. So if you are a day trader, keep doing the same thing. Now, if you want to do a swing trade, you should follow the rules of swing trading, which is following a trend. A trend, the good thing about following the trend is, for example, when you bought at $25 and after 1 month, 2 months, 3 months, maybe you sell with 50. So you double your money in a few weeks or 1 month or 2 or 3. So this is what we call swing trading. It means you should wait more and more and more to make more and more and more. You are not interested to do day trading. So day trading is different from swing trading, and please don't mix the thing. If you most of the beginners mix because they don't know. Let's say you see that that after the market hours it's going down, so you have 100 shares and you are selling short. It's going, let's say you make a lot of money, but you You don't want to exit. You say, what if Wednesday it's still continuing going down, so I will be making more and more and more money. Let's say here it goes $10 down. You are making a lot of money. You buy 100 shares, $10, it's 1,000. You make 1,000 in 1 hour or 2. But you said to yourself, why I don't leave it for tomorrow? It will continue to go down and maybe I will make another 1,000. But unfortunately, the market was going down after the market hours. In the morning, we have good news. Some good news comes, or a mutual fund comes, or whatever comes, and the stock goes $20 up. So you end up losing $1,000 instead of making $1,000. So this is the difference between swing trading and day trading. Day trading, you stay with the day. You buy, you sell with the day. This is what we call day trading. Swing trading is when you buy and you hold for more days. Even if it is 1 day, the second day, 2 days, it's called swing trading. It's not day trading. So this is just to make sure people understand what's the difference. I will make more videos explaining, it means live, explaining this into details. Okay? Now, I think we finished with this earning, and I see that you guys you didn't ask any question, but it's okay. It's okay because maybe you are waiting just to continue and see what's going on after. Now, right now, I will show you, because I told you before, I will show you why stock market, it is not the same as what we call other kind of businesses. Okay, so let's go and explain. Now, here is the stock market. Okay, and here is, let's say I give you an example of dealership. You know, car dealership. I just give you this example. Okay, dealership of cars, and this is the stocks in the stock market. I will give you the difference. Now, this is very simple, and everybody knows about cars. You want to buy a car. For example, you are living in this town or city, and there is another town. Okay? Here you find the same model, the same year, 2000, for example, 18. You find a car, the same model, the same car, the same thing. Okay? You find it, for example, $25,000. Now you go to another town because there are a lot of cars there, a lot of kind of business. You find that this town, the car is only $23,000. Okay? So when you search a lot, you find a bargain. It's the same model, the same year, the same thing. Now, if you want to do business, what you should do, you should only buy here cheap, go to another city or another car, and you sell it with 25,000, because 25,000 is, most of the cars here are sold for 25,000. So this is about cars. Now, what if you want Facebook? Facebook, there is only one price There is no other prices. For example, Facebook now, let's see, Facebook today, 147.47, just an example, 147.47. Now I ask you the question, can you go today and you find, for example, 135? Can you find a price with 135 in another place? No, you don't find. So stock market is a special market. It's not like the other businesses that you know. The price here is fixed of the traders, and you find it is one. You can't bargain. You don't find a bargain. Here, a dealership, you can find the same car, the same year, the same model. That's why what the dealers do. The dealers, what they do in order to do good business. Let's say this dealer is working in this town, and he sold the car for $25,000. Now this dealership, he goes to the auction and he finds this. He bought this house at $15,000. He bought this car. It is the same model, the same year, but the auction, because he is a businessman and he has a business, and he go to the auction and he will do his bids, and then he buys it 15. He put it in his dealership here in this town where he is now, and he will make $10,000. $10,000 after he sold this car. So the dealership has a business that it has a cheap and normal price. But in the stock market, there is only one price. So a dealership, if you are good at it, you have a sure thing. Let's say 99.99, you can do a business and you can be successful. But in the stock market, your percentage of success depends on your skills. And when to buy, when to sell, and the general mood of the market. There are a lot of things that goes here. So here, you are not sure 100% to make the money. But in the auction, you will be very, very good to make the money in the dealership. Now, since we have finished this thing, I will give you another thing. Hello, Gigio Bass. Thank you very much for coming. But you come late, I guess. We are at the end of this session. And we are at the end of this session. It's 11:44 and we began at 10. So please, guys, I ask you one question. Could you please follow me on this Twitch stream? I just began today. So my question for you guys is to follow me, to click follow in order to follow me. Even if you don't come tomorrow, after tomorrow, I will be here for the whole week. And please try just to, because I want to build some followers here, because I'm just beginning in this Twitch. Now, we are at the end of this session, 15 minutes. What I should do now is to show you another aspect of the stock market that it doesn't exist in other markets. What is it? Maybe of you, all you guys, you know this thing that that it is different in the stock market here is selling short. Now, selling short is basically, what is it? It is selling other investors, shares. Those who don't want to sell, they are very good investors, they save for 10 years or 20 years. You sell their shares, and then when you want to finish the trade, you exit, you buy back, or what you call, you cover back, and you take your money, you take your profit. Now in the dealership, you can't come as a customer, okay, and you sell the cars when they go down. Someone wants to buy it cheap, and then you make the difference. It doesn't exist in the dealership. In the dealership, you can't go to a dealership and you sell his cars to other people, and the other people sell to other people. When they go down, you buy them back and you give the cars to the dealership. You can't do that. So in the stock market, selling short is feasible. It means you can do it, but in the stock market you can't. In the stock market you can, and in the dealership you can't. It's impossible. Okay, it's impossible here, but you can. And this thing is hidden, because when you put sell like this on your broker window, when you put sell, what does it mean? It means you ask your broker to lend you shares, investors' shares. So he will lend it to you. It means you borrow 100 shares, for example. But you borrow shares, then you give them back to him at the end of the day, or after 2 days or 10 days or whatever. So you have the obligation. Whatever is the price, you should buy them again. It's your problem. Either you make money or you lose money. It's not his problem. Your problem is to give him back his shares. Whatever price are they? Are they cheap? You make money. Let's say you sell them at $25. You stay many days. The stock is 15. So how much you make? Your money make? You make $1,000 if you buy 100 shares. So this $100,000 that it is your profit is when you buy back the shares and give it to him. Okay? But if the stock, you sell short and the stock goes from 25, it goes to 35, what does it mean? It means you have lost $1,000. You should buy them back at 35 and give him the shares, and you lose $1,000 from your money. Okay? So do you understand what I mean? I mean that it is very dangerous to sell short. And in the dealership, you can't do that. Okay? You can't do that. There are other ways you can do in some other businesses, but we are not dealing with that. I'm just giving you a general idea about selling short, about the stock market, and how we have the price, how it moves, and so on. Oh, okay. Okay, so listen here. So let's see. Okay. Gig you Bass, you say sorry I couldn't come earlier. By the way, Gig you Bass is Bassan. Hey man, why are you always changing your IDs? Please put one ID, at least I know each day you change your ID. Someone is following you or what? It means you are escaping someone or something like that. Okay, Bassan, we have only 9 minutes left because this session is 2 hours, and I am sorry. I don't know that you are busy or so. And I don't know even what is this ID that you always put, but thank you very much for taking the time and coming. And what I ask you guys, all the guys that are here, please go and follow my Twitch channel. Just click on follow, okay? At least tomorrow, I will be doing the same session, but I don't know how long it will take. It depends on the people. If we have a lot of people here and they are asking questions, I can give you the lesson and then we can discuss. Tomorrow is Apple earning news, and we should speak about Apple tomorrow and what did happen. Okay, and understand that you should go to after hours chart, because the chart that I use, it will not give you the after hours. So either you can go and check Nasdaq, or you check your broker. Open your broker, try to see the chart after hours, because your broker should have the after hours chart, and look for the change when the company announces after the market close. And I told you you can do that, but you need to have time. I don't know exactly when Apple will do that, but you can go online and you ask your broker if he has some information at what time, or where you can listen to the to what we call you listen to the company announcement. Sometimes before in Yahoo, it gives us an option to listen. Okay, it will tell you when to listen, and when they begin to announce, you listen. Now when you listen, the company will give you the news. If the company gives better, what we call better than analysts forecast, maybe the stock will go up into a gap up. But if the company gives bad news, worse than the analyst, most of the time the thing will go down. So understand that. So so this is in general. We try to speak about that, and we speak about other things. And please prepare your questions before coming, whatever question you like, and we try to discuss things, and then we speak, and then we can go ahead and give more and more information. So I will be here tomorrow, if God wills, at 10 p.m. like Eastern time, like today. So if you are interested, you can come on time, and we can go and discuss this. As I told you guys, don't forget to follow my new channel. I am new here. I just started today. It means my first live. So for you guys, in order to share information and understand that I am doing mainly swing trading, but I can give information about day trading and about investing and options also. But in general, we are speaking about swing trading more and more and more. So prepare your questions for tomorrow, and we can just make another session, and I can answer all your questions. And that's it. So we have only 5 minutes. So please, guys, if you have any question, or you want to inquire about something, you can just write it. And as you might know, I have a YouTube channel. If you want to learn more about anything, you can just go to my channel and just go and watch whatever video you like. If you have questions on anything, you just send me an email, and I will be happy to answer you whatever you ask. Okay? So understand that as we talk, that earning news is tricky. It doesn't mean that when they announce good things, it means the stock will go up. Sometimes it doesn't go up. Sometimes it goes down. This is because of the majority of the people. How do they understand? That's why we say the stock market is illogical. Illogical, it means you find things that there is no common sense. That's why there is one English person before, he is always talking about common sense, and he comes to my channel and is always telling, see common sense. I say common sense doesn't exist in the stock market. It doesn't exist even in the countries. Okay? It doesn't exist. Well, what you say common sense here in America, it is not common sense for other country traditions. Other people, common sense, it's not the same as common sense as here, because traditions, ways of life, and everything is different. That's why it is not. Okay? So, this idea of common sense, it's not. Now, why is that? Because we have the same information, but people do two opposite things. I will give you an example. Why you are buying a stock, someone is selling. Can you explain that? And if you go to 1 minute chart, you find a lot of transactions. People are buying, selling, buying, selling, buying, selling, buying, selling. So you ask yourself, why these people are buying and the other are selling? It means there is someone who is wrong. That's true. If you think the stock will go up, you buy. Now, someone else thinks that the stock will go down. So I will sell short. So they do opposite things. Although they see the same chart. They go to the news, they have the same news. So you ask yourself, why the people are doing this? It's just because illogical. The market is illogical because there are people who are illogical and they don't have even common sense. That's why when I say common sense, this doesn't exist in the market. I buy a stock, I think it's going up. But you said you think that it's going down. So who is right? The market, after a few minutes or 1 hour or 1 day or two, he will show us who is right, who is wrong. So you see that? It's the market who tell us, not us. Us, we should wait. You take a decision, you buy a stock, you go long. Okay? So let's say before the market close, someone sell short and I buy long before the earning news. Now the next day on Wednesday, we will see either a gap up or gap down. So if I am right, I will see a gap up. But if I am wrong, I see a gap down, I lose money. The other guy also, if it's gap down, he will make money. But if it is gap up, he will lose money. Okay? So all depends on our vision to the market. Okay? So thank you very much, guys. It is now 12 o'clock. And thank you very much for listening all these 2 hours. I will be here tomorrow at 10 p.m. Eastern time, like today. And if you come early and have your questions, it will be better. Okay? So thank you very much and hope to see you tomorrow. Thank you very much and see you tomorrow.